Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for Tuesday, the 21st day of April. I did make a cash sale suggestion recommendation yesterday for new crop beans. Why would I do that? Uh, well, we're here this morning. This 60-62 area is very, very important. The spike high was 74. The low of the year so far was 1055. We have been making cash sales into this rally to make sure that we don't get left behind if we have a sharp correction. We already had one correction when we dropped down to 1118. We were there twice. That was halfway back of the rally. So we're getting back up here. I certainly am not calling a top. I would love to see $12 or 12.50 beans, right? But my suggestion was for everybody that wasn't 30 to 35% sold to get it done. Um, and if you do not get the cash sales done, then get an 1130 floor. You don't want to be. I don't think you need to be any more aggressive than that. Some of you can just keep an $11 floor, depending on how much revenue you want to protect. But we're at 1160 this morning, right? And we're at big resistance. So I just wanted to revisit that again. I'm not calling a top, but if you grow soybeans, you definitely want to make sure that you're doing something here, either a hedge or getting some cash sales done. And it's everybody's decision. Some people will get 20, 25%, some people will get 30, 35. I would go as much as 40 of your guaranteed bushels, but I wouldn't do any more than that. I certainly hope that we get to see much higher soybean prices the rest of the year. Why is this important? Because next month we're going to have the meeting with President Xi and President Trump, and if that meeting does not go well, will China continue to pay 75 cents more a bushel for our beans than they can get them from South America? That's my question. So it's a hedge. It's for producers that are don't have anything sold or protected. I would get after it. These corn sitting at 480. The high of the year there, 498 and a half. The low, 445 and a half. We haven't had as much push higher here in corn as we have in beans. Beans have really been the leader. Overnight, crude oil was actually lower. If you call, what a 2 cent range lower. We're trading at $2 range lower. We're trading at 89. I think as long as we stay under 90, 90 will be the pivot probably for people that will get more bullish or less bearish in crude oil. And that all depends on what happens at this meeting with regarding what's going on in Iran. And it changes hour by hour. One day there's a ceasefire. One day there's an agreement. One day there's not an agreement. One day the strait is open. The next day it's not. It's pretty much impossible to stay on top of a situation where it's a binary thumbs up, thumbs down on an hour-to-hour basis. So make the best of what we can, protect what we can. Um, that's really what I have to say. Chicago wheat, KC wheat, a little bit lower last night. Those are two markets that have had tremendous rallies, especially KC wheat. KC wheat sitting at 645. We've tested 660, which is a 13-month high, 2 or 3 times here. And again, I'm not calling top, but if I'm growing wheat, I do know that 645 is a heck of a lot better than 529. So get after it there. And we did just have a hard correction after that last USDA report. We dropped down. We went from 660 to $6. Now we're back up to 645 this morning, but we did trade to 660 again. So you sort of had a mulligan there in KC wheat. And again, am I calling a top? No, but it's certainly having trouble getting above 660. So protect that revenue, guys. And moving on to the cattle market, fat cattle was down $1.20 yesterday. Feeder cattle was down 4. Feeder cattle are very, very difficult to trade right now. The concern is the Mexican border going to open or not? If it does, there'll probably be a little bit more sell pressure there. So it's been very, very, very technical. We did have a low in May feeders in March of 336, right on the break, the stock market break, the March 9th break. Then we completely turned around and went back up and made new contract highs at 377 half. The low the other day, when people were worried about, the low on Friday where people were concerned about the border possibly opening. That was 357.80. Very, very close. I think, 357 half. That will be excuse me, 357 half. Yeah, that would be a big area, a very technical area there as well, if that holds. If it holds, we could be back to the same grind we've been going through really for the past um, since the November low, right? We get the correction, and then we continue to move higher. So there's some opportunity there. There's some risk there as well. Um, I think this is a market that's proved itself that if you are long cattle, you probably don't want to be hedged with futures because you tend to get the hedge on a break and then sit there and watch the market turn around and rally in a reversal. So using a put option is probably your better strategy. Where yeah, you spend 2 or 3 cents, you lock in the floor, but then if the market turns around and rallies $15, uh, you're not sitting there going, "Oh, I'm still short futures." So that's it. This is Chris Robinson, Robinson Ag Marketing, 312-638-8868. If you need some help, give me a call. I do work with farmers and producers. Um, I've been working with farmers and producers for the past 16 years. Prior to that, I spent 20 years trading on the floor of the Chicago Board of Trade. When I was on the floor, I was not a broker. I just traded for myself. And since 2010, I've worked with farmers and producers, really since the floor mechanism went away. There's no need for floor traders anymore. Luckily, I was able to transition, and I really enjoy working with farmers and producers. If you're looking for help, again, give me a call, 312-638-8868. Maybe my program could be a fit for you. Have a great day.